What's up, guys? Welcome back. Road to the 2 Comma Club. It's actually 10 o'clock at night. I didn't film anything this morning because I was really busy monitoring the stocks and had a lot of editing to do. So we're the day after the worst point drop in history. So I did the live stream yesterday. So today I was just kind of trying to keep my eye on things and edit. That's all I was doing today. But let's see how we did, because it was pretty crazy. All right, so we did pretty well today, guys. Really excited about this. Although I'm still really nervous, obviously. Knock on wood that we can continue. But the Dow was down. I read an article saying it was down at 1.567 points during the day. And then it finished up 567 points. So that was awesome. This was the biggest point gain in the last 2 years. And we're going to see more and more days like this as the Dow gets higher and higher. This is going to be kind of more common, so people need to get used to this. But hopefully we'll see some more calm days. That's really what we want. And I was talking to a couple people on YouTube. They were saying we need some consolidation right now, and even a video was posted on CNBC. Someone shared it on the Facebook group, actually. So if you're not in the Facebook group yet, check out Road to the 2 Comma Club on Facebook. And we continue a lot of the conversations there. So if you want to reach out to me or talk to anyone from this group, just go there and post your questions there. Awesome. So anyways, the video that the guy posted was the guy saying basically we're looking for consolidation at this point, which means, if you're not familiar with that term, it just means when the stock kind of hovers around a certain level. So it might go up, down, but it kind of stays, it kind of like converges to a certain level. And then after that, usually people will get used to the prices and then they'll start to buy some more, and that drives the prices up. So that's what we're looking for right now. And in fact, let's just look at that right now since we're talking about it, so I can get rid of this page. So I was looking at the moving averages, and let's go back to the 1 month. And I have here the black line is the 50-day moving average, the one below it's 100-day, then 150 below that, then 200 below that. And according to the video I was watching yesterday on YouTube, you want everything to be in order. So the 50 on top, and then it gets bigger as it goes down. So that right now, according to this, 1 month trend, things are looking good. Even the 3 month trend, things are looking good. But I noticed when I hit the 10-day, things started to look pretty bad. So like the moving averages, the 50-day moving average, started to go down. It crossed, and then everything kind of reversed order, which is a downward trend. But I don't think a 10-day window might be enough to show that, because look what happens if you go to the 5-day trend. You can kind of see at the 10-day, the 50-day is starting to come back up. But again, everything is reversed. So this might look like a downward trend, but then you go to the 1 day, and then you can see the 50-day kind of cross back above, and then it crossed back below, then it crossed back above again. So this could be the start of an upward trend. We're not really sure. It's not enough time to really make a decision on that. But also with this graph, I remember him saying you want to look for like 4 lower highs and 4 lower lows to really, in addition to the downward sloping moving averages, to kind of determine if we're in a downtrend or not. But I don't know how big of a high you look for, because you can see this thing's getting in the way, but like you can see here, there's like a lot of little itty bitty highs and lows. So I'm not sure which one they would count. But let's say they counted this one. This would be 1 right here. Then this is 2, 3, 4. But on the lows, you have like 1 here, 2 here, and then this one kind of comes back above. So I think this is kind of showing that it's kind of bouncing off whatever resistance level was there. It's just kind of right around here. It's coming back up, and so I'm hoping that that's the case. I'm still a very beginner chart reader, so if I made any really ridiculous mistakes, please comment below and tell me how stupid I am. So let's go to CNBC, because I'm looking at some articles here. Then we'll get back to Scottrade. Actually, no, we gotta go to Scottrade before they refresh. Sorry about that. So let's look at some trades I did today. So someone recommended, and I was thinking about it, and I kind of agreed with the commenter on YouTube. So shout out to the person who is just kind of saying like Tesla's earnings might not be great. So you might want to consider selling some of your calls, just because it might be a volatile time for that. And so actually what I did was I kind of compromised. I sold my highest strike, because Tesla's like at 330 or something right now. We're still pretty far away from the strike. And if they go down more, these are very dangerously going to be like not even close to expiring in the money. So what I did was I sold my 5 calls, got 12 grand back. I put in 8 grand back into Tesla calls, but with a $50 lower strike, which makes it way safer because we're only now like $35 away from this, which is much better than $85. And then what I did with the extra money, as you can see here, I bought actual stock again. So went away from options, went back into stock. So these are very safe positions compared to what I've been doing. And so I'm hoping this put me at 100 shares total with AT&T, and then I bought 191 shares of Ford, which put me at 200 shares. So if I wanted, I could sell some covered calls, but you don't get a lot of money with these because they move so very little. There's not much implied volatility with these two stocks. So you're looking at like $10 maybe per covered call that you might make in profit. So it's not like a crazy amount of money, but if I wanted to do that, I could. And they pay really good dividends. And so, like for example, the Ford, with my 9 shares, I was going to get, in fact, let me show you real quick, flexible reinvestment here. Originally, I only had 9 shares, which was going to give me $1.35 the next time dividends were paying out. But now that I got 200 shares, it bumped up to $30. So it's a lot more. And, with the volatile market, I like having guaranteed income. So that makes me feel a little bit better. And so I got a much larger percentage of my portfolio now. I think it's above 10% in either stocks or puts, which should give me some decent, protection or, against all this crazy volatility. And so I'm hoping, though, I'm crossing my fingers that the stocks will come back up so that I can start making more money again with the calls. But we did do well today, so I can't complain. I'm just taking one day at a time, and I'm rambling now. So let's just keep going. Let's look at the positions. We had a lot of good ones today. As you can see here, Cypress went up 33%. In fact, let me just order it. Let me do it by percentage. Let me order it up here. So oh wow. Okay, yeah, so this is the covered call that we sold. This is actually bad for us because we don't want them to go up because we sold that call to somebody else. So we want this call to expire worthless. But it's worth $100. We sold it at 188, so it's still below from what I sold it at, so that's still good. Micron, though, had a really good day. General Motors, Cypress, STM, Home Depot, Sprint, Universal Display, the call that we do own, did well. And then Apple, we got a lot of them. So it was a good day for a lot of these guys. Google made me feel really good because this one's still kind of pretty high at the strike price. But yeah, so let's just go back to our losers. So you can see NVIDIA, we actually made $2 grand with those calls, so that was pretty sweet. Going down here, we got Tesla did bad. So it's kind of good that I got out of that 421 because I think this is a little bit safer. Now I have 360, 370, 380. So a little closer to the at the money price, which gives me a better chance of finishing in the money. Since the stock market did well, our puts went down, so we lost money on that, but that's okay for me. I have those for protection, so I'm okay losing some money there. Let's go to the watch list. Marijuana stocks still killing it. Man, I really wish I'd bought some yesterday. That was stupid of me not to do that. I should really buy some. I'm stupid for not doing it. But OLED, you can see a lot of good names here. Let's go to page 2. Let's go to page 3. Let's go to page 4. Actually, let's go to page 2. I'm going a little too fast. Amazon, we got Ferrari, Netflix. That is awesome. That is awesome. You can see the NASDAQ went up 148 points here at the bottom. That is awesome. So much awesomeness. But, I'm not getting too excited because a lot can happen. Just take it one day at a time. Everyone can remain calm and buy incrementally and take their time. I think we can have a good rebound here, guys. All right, so that takes care of that. So I'm going to go ahead and close that. Art Cashin, who's a 50-year veteran with stocks, he thinks that a lot of these conditions are making for a nice bottom, which means it could go up. That kind of summarizes that. I'll put a link in the description for that one. Credit Suisse says it will end trading of the volatility security. So yeah, I think they were talking about this, that ASVIX stuff and the UVIX, whatever. It was just causing too much volatility, and it might have triggered the sell-off a little bit prematurely or something. They're just saying that it kind of made things worse, and so they're going to be not doing that anymore. And I think that's a good thing. I think people are getting too greedy, creating new instruments out of nowhere just to gamble and make money. I think it'd be easier if we had less complicated instruments. The fewer the better. Just invest in stocks and bonds and options. I feel like that's good enough. But there's just so many things you can bet on nowadays. I don't know. I guess I'm kind of all crotchety old man talking here, but that's just my opinion. I'll post a link to this one too. You can read that one. And then Chipotle, I just saw on the homepage. This is. I wonder if this is clickbait. This might not even be a real article. Maybe it is though. But that's interesting. Chipotle has a plan to regain customers. So, yeah, that's interesting. I personally don't go there that much anymore. It's not that I don't think I'm gonna get I think I'm gonna get sick. I know odds are I probably won't. It's just I don't know. It's just I don't go there that much, and a lot of people don't go there because of the sicknesses people have been getting. But they're really working hard at rebranding that. So good luck to them. Okay, and then over here we got Elon Musk wants a new space race. That's gonna be cool. I gotta read that one. You can check that out if you want. And then Snap soars over 20% on a strong earnings beat, so that's cool because that can kind of help bring stocks up a little bit. I mean, Snap is a really small component of, I don't even know if it's not in anything really. I think it's on the NASDAQ, but it's not the Dow or anything. But like the point is with, there are some big earnings coming up, like Nvidia and OLED's coming up and Tesla. So like if companies can still report strong earnings, that'll kind of help bring stocks up again. And so that's what we're looking for. We don't want anything to like send shares down, which can cause a domino effect. We don't want that. Okay, so there you go. We're going to end it at that. Alright guys, so if you liked the video, please hit that like button and subscribe if you haven't already. And comment below if you have any comments about the articles I mentioned or about the volatility in general. Do you like the fact that they're getting rid of the UVXY and the SVXY? Or were you using that as a kind of a hedge, or I don't know. What are your thoughts about that? Please comment in the comment section below. I also want to know, I'm just curious, interested. Do you guys eat at Chipotle anymore? Did you used to a lot and then not so much anymore? Comment below, and I'm interested to hear your thoughts on that as well. So again, thank you guys so much for watching. My name is Justin, and we will see you guys tomorrow.